diluted. In fact, they are moderately higher. Ashwini Agarwal joins us now with his big picture view on the market, assessment of earnings, and where there's opportunity in the mid and the small cap space after the recent rout of selling. Ashwini, morning. Thank you for joining us. What is your sense? Do you think large part of the price adjustment and the pain is behind us, or fundamentally it's difficult to justify a bottom?
So my sense is that, if you look at the mid and small cap space in particular, we find that there is a significant amount of value emerging in individual stocks. The broad indices, at least in the large caps, have held up, and that's actually explained by a smattering of 6 or 7 large stocks which have continued to do very well in the first half of this year. And that explains why the Nifty or the Sensex haven't had as big a fall as the mid-cap indices have. But if you break down the index and you see the fall in a lot of the large cap names is also to the tune of 25 to 30%. So at least my sense is that value has started to emerge in a host of individual names. But this is more bottom up rather than top down, and my sense is that when we look at individual companies, back in December I could find very little value in the market, but today I'm excited about topping up some of our existing holdings. We are finding new ideas at these prices, so it's quite an exciting time, at least from a bottom up perspective.
Say you are adding to your existing positions and you're finding new ideas. Could you give me a flavor of where exactly you are hunting? And apart from private banks, which is part of everyone's portfolio now as an anchor investment or as an anchor sector, where are you hunting for ideas here? What are the what have you managed to treasure hunt in this kind of a mid-cap rubble?
So what we are finding is that domestic industrials are giving you a little bit of an opportunity. Manufacturers of various kinds, we are seeing some opportunity there. We are seeing some opportunity in the infrastructure space. We are seeing opportunity in the auto components chain, the auto supply chain. You mentioned private financials. So, on the other hand, I would say that, barring the industrial banks, we find the private financials to be quite expensive. So, industrial lenders and small private sector banks, the old private sector banks, is again where we find opportunity. So, here, these are some of the areas where, on a bottom up basis, we think that there is value support that's emerging.
Ashwini, why is it that you're recommending staying away from metals? Do you not believe that the commodity is still in an upcycle?
No. Metals is a very, very difficult sector to analyze purely from the perspective that, it's a global demand supply driven situation, but, that is made more complicated by specific trade actions that countries may take. For example, India has in place anti-dumping duties on steel. There is a significant uncertainty relating to the trade outlook between US and China, and what that does to supply in the region is extremely hard to predict. So, your research analyst in your previous comments mentioned that the metals companies will have very robust numbers, and I agree with him. But I just find it very difficult to forecast where things will go from here. So while valuations are cheap, the uncertainty to the outlook on a medium term is quite high. So we prefer to stay away from them. That's actually been a historical stand. We've typically not invested in metal companies because of very, very difficult to predict the future. But having said this, yes, the earnings are going to be very strong. Valuations are very supportive. So you could see a short-term rally. We are a little cautious purely because of the uncertainties involved.
What about pharmaceuticals, Ashwini? Because, clearly the dark clouds seem to have been long gone, and it's been raining gains for pharma. Do you believe that pharma could be what IT has been year to date? And perhaps it would make sense to stretch yourself out of the usual large cap pharma names and have a more of a basket buying approach in pharmaceuticals?
Absolutely. Actually, in my comments when I covered the sectors, I should have mentioned pharma. We like pharmaceutical stocks very much at these levels, both in the large cap and in the small cap space. We've seen a significant erosion of prices in the large cap space over the last 2 years, and in the small mid cap space over the last 1 year or so. Valuations are extremely supportive. A lot of the companies are net FX earners. And I think from a regulatory standpoint, the domestic pharmaceutical industry now knows what it needs to do to steer clear of regulatory problems, in the sense that my sense is that over the last 3 years the regulatory goalpost moved a lot, and now I think the Indian companies are broadly aware about what they need to deliver from the regulatory perspective, and I think the accidents going ahead will be far fewer. Having said this, I think earnings will remain volatile in this sector, because there is a huge pressure on raw materials from China, emerging purely from China blue sky policy, where they've been cutting down supplies and manufacturing for a lot of these products. So that is one issue that you have to deal with. Also, the FX movements and volatility could actually hurt the short term earnings, because some companies have borrowings in FX, and not everybody has all their revenues in the USD. There could be other currencies, and cross currency movements could have some impact. So I think short term earnings uncertain, but long term valuation support, long term industry outlook looks very, very good to me.
Ashwini, you're saying you see a turnaround in PSB earnings. What convinces you for the same?
So I'm looking at the PSB earnings from a longer term horizon, from the next 4 to 6 quarters horizon. I don't think that this quarter will particularly be exciting for them. But if you look at the overall stock of bad loans, the overall stock of bad loans is pretty stable right now. I mean, it's growing, but it's growing at very, very small percentage points. So the problem is largely well defined. It is significantly provided for, not entirely provided for, but significantly provided for. I'm also hopeful that the resolution process through the NCLT courts under IBC will continue to progress, and we will see resolutions to some of the NCLT 1 lists which are pending in the courts over the next 2 to 3 months. That's a significant assumption behind my positive stance on PSB earnings from a 4 to 6 quarters perspective. I also think that spreads have bottomed out. I mean, these banks over the last 4 to 8 quarters have been under significant duress, trying to manage their provisioning costs, but with interest rates having stabilized and lending rates starting to look up, I feel that you will see some positive momentum in their spreads as well. So here you have a story where provisioning will probably start to decline on a 4 to 6 quarter outlook basis. You will see better spreads. Growth will not come through, barring the top 3 or 4 names. So you have to be extremely selective. But I think the worst is behind us insofar as the PSU banks are concerned.
Okay, but then the large part of the